next up, we have Alla Peters. So I'm just going to make her the presenter and then let you know what Alla is going to be presenting. Okay, so Alla is the founder of Alpha Wave Trader.
Hello, traders. It's my pleasure to be here.
Oh, hey, Alla.
Hey.
Okay,
Kevin.
so Alla is the founder of AlphaWaveTrader.com. With 15 years of experience in the financial markets, Alla has designed a methodology to capitalize on trading opportunities using pure price action for entry and Fibonacci for exits. Alla, it's all yours.
Thank you so much. Thank you, Kevin. Thank you, traders. Thank you, Mark, for having me. This is Alla Peters. I'm a founder and developer of Alpha Wave Trader method that's based on price action for entry and Fibonacci for exits. Method applies to any instrument and any time frame. It is indicator-free method. So first of all, I'd like to tell you about the format of the webinar. The PowerPoint presentation will be quite brief. It will be about 15-20 minutes. The most exciting part of the webinar for me always answering your questions. Love, love, love questions. So please prepare the instrument of your choice and time frame of your choice, specified precisely, for example, S&P 5-minute or Euro weekly, and I look forward to analyzing it for you. So, first of all, let's remember US government required disclaimer. Please spend time reviewing that, as it is absolutely essential to recognize the risks involved in trading. So, what makes Alpha Wave Trader method so different? There is no software programs used whatsoever. There is no indicators of any kind. Just pure price action. Each and every trade taken using market structure and exiting Fibonacci levels. For example, when you come to Alpha Wave Trader Room, you will see charts that some of the traders, especially beginner traders, may find incredibly boring. Plain vanilla. This is all I need and all my students and graduates need to identify the power of the trend, the weakness of the trend, the correction structure, the point of entry, the precise stop, and precise target. And I will review in detail various trades we had taken in our day trading room recently, and I look forward to showing you those examples on various time frames. So why in the world do I, my team, students and graduates do this? Why are we using no indicators whatsoever? In fact, each and every indicator that exists looks at how market had behaved after the fact. Indicators do not tell you how markets will behave in the future. Each and every indicator and software that exists tells you with delay what happened most of the time after the fact. For example, based on Alpha Wave Trader method, this is an example of S&P daily chart. All the levels had been drawn on S&P daily chart first week in October, spelling out where the trend exhaustion levels will be, which are reversal zones. All the levels in October were incredibly clearly to identify the end of the minor trend, which is decision point 1. First week in October, it was incredibly clear that decision point 1 will be broken to the upside. The trend did not have enough strength to reverse. And pay attention to the precision and to the dance between the levels that S&P had done the last week in October all the way towards the end of the November. Dance back and forth, giving another very, very powerful buy point. But what has happened to the trend when it reached the reversal zone? Trend did not have enough power to break it. That's precisely why I named this level reversal zone. Formula remains the same. It doesn't matter what I trade. Do I trade range charts, which is exactly the chart I demonstrate Alpha Wave Trader in our trading room on range charts. I believe in Fibonacci numbers only. This is a trade that formed on S&P 8 range chart. 8 is one of my favorite Fibonacci numbers. Where has this trade ended? At reversal zone. If you know where this zone is, you know where to take profits of the table, and you know what not to enter into. The long from 1769 started finding very powerful point of resistance after reaching this level, completely collapsing. That is absolutely essential to identify where these levels are. Doesn't matter what instrument you trade, doesn't matter what time frame. So what is so powerful about the indicator like moving average, which used to be my favorite? Moving average works incredibly well on occasion in trending markets that occur only 20% of the time. Even if it gives you very late point of entry, you still have power to catch a trend. What happens 80% of the time when markets stuck in correction, which is exactly what S&P had done on Friday and Thursday. Price had reached the end of the minor trend. All the levels drawn on Monday this week, days before this level had been reached. So when we come to the trading room, Alphys, students, graduates, and I will look at the structure and we say, ouch, bad idea if you are seeing that price comes very close to this level. This is the most critical level in the market structure. This is where trader monitors for powerful reversals, remembering to never, ever, ever acquire a position nowhere near this level. And this is where S&P continued its dance, giving powerful buy points when each and every time price came to this level. And here we are. 3 days later, S&P still had not been able to break this level. That's why it is so important to never, ever, ever acquire trend position near the end of the minor trend, but to monitor for signs of reversals. And those are inherent 4 rules that must be met before trader ever acquires a position, knowing these levels far in advance. So there we go. There are indicators at work on some instruments, on some time frames, but not always. Price remains the same. Fibonacci levels remain the same. And this is an example of one of the students that came to me after trading for over 20 years. This is what his charts look like. He came and said, you know what? I surrender. I surrender all. I have complete lack of market clarity. And I said, let me see what your chart look like. Ouch. Where is the price? Endless errors, endless volume, stochastic crossovers, God knows what, giving absolutely no clear vision of the price formations, none whatsoever, giving completely overriding factors, reminding you that the most important component of this entire structure is price. Except if trader pays attention to all the errors, all the stochastics, trader becomes incredibly dependent on those tools versus improving knowledge of the markets, which are in fact are not complicated. So there we go. This is what the charts look like in Alpha Wave Trader Room. Precise, clean, and clear. Showing you precise stops, precise targets, levels of exhaustion, levels of reversals, giving no conflicting signals. Here's example oil 1-hour chart. 1-hour chart is a guiding light what I use on oil before I ever acquire trend entry. This is where oil had started giving us dents after reaching decision point 1, giving very powerful short point of entry from 97.90 area. This has always remains the first target. What has oil done after reaching reversal zone for the first time, giving 3-hour dents? Nothing meaningful, just endless job, but still reminding you, respect where reversal zone is. Know what not to enter into, because anything is possible if this level is reached. And what has oil been doing finally on November 13th? Giving endless dents, endless job, reaching final level, reversal zone 3. Giving powerful buying opportunities that went on for 50 ticks. That simple and that pure. And all you need is pure price to identify all of this. So there we go. Indicator-free trading is the key. If you pay attention to price and obey 4 rules, next you apply Fibonacci levels that spell out and show you targets. So what exactly are Fibonacci levels? Fibonacci levels surround us in everything. Fibonacci levels found in human body. Take a look in the mirror. Why is human body has such an incredible symmetry? Why there is nothing random when you look at the flowers, you look at the trees, or you look at the price? Formula remains the same. But it is absolutely critical to recognize that Fibonacci, in fact, is incredibly simple golden ratio that keeps repeating itself in the same exact sequence. If you would add each number, the subsequent number will become the sum of the previous two. In the day trading room where I demonstrate alpha wave trader method, I use range charts 5, 8, 13, and 21. Smaller the time frame, smaller the stops, smaller the targets. If I'm trading 5 on S&P 500, my stops and target on 5 will be 4 times as small as my stops and targets on 21. I would never trade 5 on oil. The smallest chart on oil, I would be trading 8. Graduates trading 34, 55, daily, monthly, and weekly charts, its formula remains the same. But what I demonstrate the method on in trading room are range charts, because they're giving us plenty of trading opportunities. So let's review one of the examples that we had taken in Alpha Wave Trader Club. This is a short on oil monthly. This is where bullish trend, all the levels drawn 2 years ago, oil reached this level. Decision point 1, that's exactly why it is such a beautiful magenta level, because it is the most critical level in the market structure. Once this level had been reached, on the 3rd month, price completely collapsed. And why has oil been having incredibly slowest months on record last month? Because bearish trend found the exhaustion point. Based on alpha wave trader method, based on the current structure, I expect this to be only a corrective wave. I expect this bullish fluff to end and for the bearish trend to continue much lower down, taking a pause at reversal zone 3. I expect the collapse to continue at the end of the month. And you're witnessing that each and every time the sellers show up on oil, they're showing up with drastically bigger power than you see on bullish structure. Because major trend on position trading time frames monthly chart remains much more powerfully bearish. Bullish is simply a corrective wave. That's all there is. And you know all of these levels far in advance. So here's an example. This is what we teach in the course. This is how basic alpha wave trader method is. Major waves consist of 5 waves. Minor trends consist of 3. There is no XYZs. There is no speculation. There is no vague analytical speculative uh, levels. It is incredibly precise, it is simple, it is clear. Wave 1 identifies where wave 5 will end. Wave 1 is absolutely essential and critical to know, because once you learn how to identify this, you know if you want to be on the side of the powerful trend, wave 3, or if you are to stay out of the market if market is in corrective wave, which is wave 2 and wave 4. This is exactly what S&P daily is doing. This is the most powerful bearish wave we had seen since October 2012. What you've been witnessing on S&P for the last 2 days, as we discussed in our education course, is very temporary pullback, as I have been posting on the social media forever and ever. I expect this collapse to continue much lower down. The pullback at 1755 will tell us if buyers are stepping in with vengeance. Based on the current structure, I expect also a temporary pullback at 1755 and collapse on S&P all the way to 1700 and potentially 1600 area. Again, I will be analyzing the price structure on 1755 before I will give you the final determination of the collapse. But that's incredibly clear. This is the most powerful bearish wave we had seen since 2012. If you position trading S&P, you do not want to be long. It is clearly powerful bearish trend. Anything bullish is counter trend wave. Therefore, you are trading currently wave 2 if you're acquiring long position. That's simple. Stay on the side of the power. Wave 1, wave 3, and no, we're not to acquire position at the end of wave 3. That's it. That's all there is. In the course, you learn 4 clear rules: how to acquire position at the inception wave 1 and the inception wave 3. Trading at the end of wave 3 is simply not a prudent thing to do, because you're simply acquiring a position at the end of the minor trend, trading into the brick wall. That's all there is. Again, minor trend 3, major trend 5. Stay out of the corrective wave 2, wave 4. Play by the rules. 4 rules are in. Take a trade. Here's a classic example of NASDAQ. In the room in the last 2 years, I've been rotating through various instruments, demonstrating the method on Euro, NASDAQ, oil, gold. And then we came as a graduates and we said, why oh why do I need to look on so many charts? Let's stick with S&P and oil. S&P is incredibly well-behaved marching soldier, as it is the most liquid future in the market, while oil has very low liquidity and therefore is a beast. So when we have experienced traders in the course, they have tendency to gravitate towards oil. Beginner traders have tendency to gravitate towards S&P. But here's an example on NASDAQ. This is a classic structure. This is what happened when price had reached the end of wave 3. If it's a major trend and you start trading outside of wave 3, you may get lucky on occasion, catching tiny bit more. Just like what happened on this trade on S&P. Catch a little bit more. But what is a prudent thing to do? Prudent thing to walk away from computer. Prudent thing not to acquire position once reversal level had been reached, and to monitor for sign of reversal. That's all there is. Not complicated. One of the most essential components of successful trading is to know when to walk away from computer. And all you need is to identify those incredibly critical 4 rules before you ever take a trade. And that's exactly what we teach in the course that is ongoing in Alpha Wave Trader Education Room. So here it is. This is very, very critical reminder of the ranging markets that especially highly happens during holidays. 80% of the time, especially on S&P, lately we come to the markets and prices stuck very, very clearly in corrective fluff. So if you obey 4 rules, you know not to trade this. You know when to walk away from computer, not to babysit very fluffy and very corrective moves. Based on the rules, you trade very powerful trend inceptions. This is yes trade, this is no trade. This is a correction. And all you need is pure price to tell you where the weakness is and where the strength is. That's all there is. Power, ouch, fluff. Walk away, don't babysit, no need. Trading has entirely different mindsets than investing. I meet so many people who come and say, I will look at the computer 12, 24 hours a day. I will learn. Such not a good idea. 3 hours max. If you're sitting in front of the computer and you're babysitting fluff, you learn nothing as a trader. You become incredibly demoralized and incredibly discouraged, and you start pulling trades out of the market that gives you none. It's absolutely critical to respect when market tells you, walk away. Don't exercise ego. Don't exercise greed. Respect what the price is telling you. Enjoy powerful formations. Enjoy rides to the upside. Walk away when fluff is on. And that's when test of knowledge is absolutely essential. And no indicator will tell you that. So there we go. Very, very important to recognize that trending markets occur 20% of the time, unless you are like our amazing graduate Catherine, who trades DAX in the middle of the night, or John C., who trades gold 24/7. If he is away, he trades gold at night. If he has time to come to the computer, he trades gold in the middle of the day. If he works, he does it. Or Liz, who is a doctor who trades oil only the first hour in the morning before she goes to work. Those markets are trading drastically more often than S&P or bonds. One of our other graduates, you have access to all of them completely if you want to send email. I will forward your phone number and your email, and you communicate with our graduates in complete privacy, as well as you can see all the posts and audio testimonies on the website. Dan trades natural gas and gold. Natural gas trends on Thursdays phenomenally well. He just sent me an email, said, why oh why we babysitting S&P this fluff when Thursday is net gas day? And he's sending me reports how well he's done last Thursday. So yes, this Thursday is my last day before Christmas vacation. I said, okay, we're coming to the markets and S&P is stuck in correction. Why not? I'll take a look at gas. It doesn't matter to me what I trade, what instrument, what time frame. Formula remains the same. And this is again very classic pattern, reminding you the power of wave 3. Again, wave 3 is always present in minor trends and major trends. But this is where it gets funky. If you don't know where wave 3 ends and you're acquiring a position here, ouch, you think you're acquiring powerful position, but this was 2 days we set on S&P. Reminder, the contract had changed. S&P actually on December contract blasted through 1811. This was S&P these 2 days. We were sitting here and I was saying, guys, I'm sorry, but I will not take long anywhere here, only short. And short setup outside of trading room hours, just like this long setup outside of trading room hours, and our graduates had taken those trades. Reminding you, if you come to the markets and markets stuck in correction or exhaustion, I encourage all, leave, monitor for formations, because I expect it will absolutely set up. Just price does not care about trading room hours. Respect the rules and take a trade. That's all there is. And as you could see, price had collapsed from reversal level. And where's price dancing currently on S&P daily? At decision point 2, collapsing much lower down, but again, monitor the formation at 1755 that will identify the strength of further collapse. That's all there is. Simple. 4 rules, any time frame. This is exact same example of the short structure, exact same wave, reminding you nothing good happens if you're acquiring a position at the end of wave 3. Respect what price is telling you, and if you come to the markets and price is here, prudent thing to do is to walk away from computer. Very, very critical and very important. Not to babysit the corrective fluff. The mantra in Alpha Wave Trader course, when market gives you flappuccino, you go get cappuccino. You don't force a trade. So there we go, a couple of examples, and I look forward to answering your questions. Euro USD 3-minute chart, very, very classic structure, reminding you, once 4 rules are obeyed, catch the inception of the trade, stay off when prices give you corrective wave 2, and enjoy a powerful rally. Most important wave in the market structure, wave 3. And if you come to the markets and prices here, go get cappuccino, get a hobby, get a dog, do something, but don't acquire a position at that level. Here's oil, the beast of the indices outside of DAX. I must tell you, Catherine is the most courageous woman trader I've ever met. I've never met a woman who trades DAX. It's absolutely phenomenal. I've never traded DAX, and when my graduates come to me and say, I trade DAX, I trade natural gas, I trade euro, I trade bonds, I love to hear, because everything we teach in group education, we teach on S&P and oil. In private mentoring, you can learn on any other instrument, on any other time frame, in addition to all the group classes. But formula remains the same. Choose the instrument that speaks to you, to your psychological comfort, to your account size. Very, very critical and very important to remember. In trading, you become a master of one or master of none. Trading is not an investing. Diversification does not apply. Until you double your account size with one instrument, there is no need to trade two. And definitely start with the instrument that you have enough time to analyze, not the volatile instruments like DAX, pound yen, oil. Respect what instrument is telling you. Here's an example of Google 1-minute chart. Classic, clean, and magnificent structure. 5 waves are formed. Very powerful short point of entry. Enjoy the ride. And of course, once 5 waves are formed, you never acquire long positions. You respect the structure. So there we go. That's all there is. 2 key concepts. Pure price for entry, Fibonacci for exits. No software, no indicators, any market, any time frame. In the course, we concentrate on range charts, hourly. In the wave classes, I analyze daily, weekly. In private mentoring, we concentrate on the instrument of your choice. So pure price action is what's absolutely critical in the market structure. This is what defines wave formations, defines wave terminations, and therefore forms Fibonacci price waves, giving you high probability entries, high probability targets, and showing you areas of inherent danger, which are reversal zones. Here's an example: Apple long monthly. These levels had been drawn since 2009. What has happened to Apple when reversal zone had been reached? Apple staged the reversal. So if you position trading Apple, or you trading Apple with options or any other wave, that's where you monitor for very powerful reversal opportunities. Never ever trend opportunities. It's that simple. And what are you witnessing currently? What is Apple doing right now? Again, it bounced from decision point 2. And what is Apple doing? First time since it staged the reversal. It's giving a pullback. But do you know what I see on Apple? It's incredibly critical months on Apple, potentially showing, again, very strong reversal structure. This is where you're monitoring for very critical 4 rules to see if it's inception of the bearish trend or if it's a bearish reversal. That's all there is. If it's only a pullback, if it's only a correction, the price will show potential of revisiting 650. That's where I will be again monitoring for 4 rules. Respect what price is telling you. Follow the rules, and you can trade any instrument and any time frame. So in Alpha Wave Trader community, we have a couple of various rooms. First room is a live trading room where I demonstrate the method on various range charts from 5, 8, 13, and 21. Again, all the stops and targets based on the time frame I trade. 5 will give the smallest stops and targets, 21 will give the biggest. On occasion, if like S&P giving us nothing, I may be looking on other instruments that will give us drastically more powerful formations. As I promised Don, next Thursday I'll be looking on natural gas if S&P will keep us asleep, as it did this Thursday. Education room is entirely separate, which is outside of trading room hours. Every Monday, Wednesday afternoon, and Friday. I don't believe in trading on Friday. I believe that it's the most dangerous day to trade, as this is a day when market makers meet their quota. This is a day when I believe you should take Friday off, have a long weekend, and remember, the best days to trade are Mondays through Thursday, not the end of December, not the end of August. And that's where I demonstrate the method, and on Friday I teach in education room these Fibonacci levels. The course is ongoing, starts every Monday. There is a course the entire month of December. Focus remains on education the last 2 weeks on December, not on trading, as it is the most challenging time to trade. It's great time to learn or great time to take a vacation. Once you finish education, which consists of 8-week course, which is definitely an overkill, 10% of our students learn everything within the first week. The other 80 learn everything within 3-4 weeks. You simply migrate to Alpha Wave Traders Club, which works together with the trading room. Before I take any trade, I discuss my analysis of the structure, and this is where we're meeting with our students and graduates pre-market. So there we go. That's all there is. I believe 3 hours in front of the computer is plenty. I believe if you can obey 4 rules, apply patience and discipline, trading is the best business in the world. You are your own boss. You can take time off wherever you like. But do remember, leave your ego at the door. And remember that markets are so much bigger than any of us. And that's the reason why I find trading the most exciting business on the planet. No day will ever be the same. And each and every day you will be tested for your patience and discipline. And the key remains the simplicity and precision. 4 rules: stop, target, and entry. Monday through Thursday, 3 hours. Plenty. I look forward seeing you in Alpha Wave Trader Club. Let me give you this incredibly special link. When I'm back from vacation, I am here until Thursday. If you like to speak to me, you can always find the information on the website, how to contact me, but here is a special link. Again, the course is ongoing. Danny is teaching the course while I'm gone. Danny is absolutely amazing, the most patient teacher you can ever wish for. I teach private mentoring and I teach wave classes on Friday. So I look forward to your questions. This is all I have, so please post the instrument and the time frame, and I look forward answering it. Trying to see how I can see all the questions. All done. I know where the wave one is after I apply for rules. Yes, as I mentioned earlier. I only use all the Fibonacci levels are Alpha Wave Trader proprietary Fibonacci levels. They're completely free on any platform. We have traders who trade on TradeStation, MT4, Sierra Charts, Infinity. My choice of platform by far is NinjaTrader. We show all of those levels in our education course. That's how we identify them. That's exactly what you learn in the course. How to identify the time frame? The time frame identified based on your psychological comfort, based on your account size. Absolutely essential and critical. Bigger the time frame, bigger the risks, longer the trade. Are you a day trader or are you a position trader? Only you know the answer. Yes, absolutely. Love the question, PCLN. Excellent question. I will highlight to you where the levels are. PCLN is the first stock. The 4 rules spelled out in the education course on every class. That's what you start with. Precise 4 rules remains the key. Everything in life is rule-based, correct? If rules are broken, nothing good happens. Trading has exact same formula where rules are absolutely essential and critical. Think about driving. What good happens if you break the rules? Think about relationships. Ouch, you better play by the rules. Trading especially, your account will not lie if you obey the rules or not. PCLN is ready. Google coming up. Any other questions? Google, PCLN. Any questions on futures, guys? No questions on futures on Corex, correct? Hold on 1 second, finding Google. A, B, C, D, E, F, G. Where's Google? Beautiful instrument. Yes, Mark, excellent question. You want to trade with institutional volume. You want to trade with serious players, and you want to take vacation when serious players take a vacation. Take a tour of Wall Street. It's a ghost town as of 15th of December and as of 15th of August or even a week earlier. That's when market goes typically in corrective structure, and that's when newbie traders come to the markets without recognizing the importance of trading with serious, powerful structure. Very, very dangerous to be on the corrective structure, as we've been witnessing. S&P had been giving us quite a lot. Oil low liquidity instruments are not as susceptible to holidays. Oil is still magic, as you could see on my performance page. So again, let me post special link for a trial. I highly encourage you to take a trial. Please, guys, let me know that you could see the link. Is everybody seeing the link? I never even knew Elliott wave existed when I designed my method. I have quite a few students who came from Elliott wave background. The only thing I can say, they compare it to very, very simple version of Elliott wave. It doesn't involve XYZs. It's simply 1, 2, 3, 1, 2, 3, 4, 5. Pound yen for our chart. Any other questions? Apple and SPY, we already looked, May, on multiple time frames on SPY. S&P, which is the S13 range, is SPY. I already looked on daily, hourly, and monthly. Apple, I saw the question. DAX, Jasmine, another girl who is trading DAX. That's magic. Should introduce you to Catherine. All right, DAX coming up. We're done with stocks. Yes, if Forex has price in Fibonacci, the answer is yes. It applies to any instrument and any time frame. Amazing Jim G, who is retired in his 60s, trades weekly and monthly Forex. Absolutely. If it has price, if it has Fibonacci, the answer is da. TSLA, I don't have Tesla. Poor Tesla. Bonds coming up. 3-minute S&P, we'll take a look again. Okay, hold on 1 second. I'm just trying to get all your questions on the charts so we can start going through the charts. Bonds, bonds, bonds. Are we taking a 10-year, correct? ZN coming up. Yes, Mel, rules are essential and critical. 4 rules obeyed, you taking a trade. Exactly, John. That's what they learn. How to draw these levels. 4 precise rules. Does everybody see the link? Yes, Greg, as explained. 4 rules obeyed, you draw the wave. Aussie dollar daily. Let's go. Let's go to the bonds and let's go to Aussie dollar daily. Great questions. Bringing up Aussie and going to the charts. So at this point, that's the last question. I know, Mike, the charts are not ready. I'm trying to pull up everything. And I will go with one instrument at a time. Aussie coming up first as it starts with A. The question on Aussie was, what time frame daily? Let me show you the chart on Aussie. Where do I think Aussie daily is currently? Woohoo! Aussie going south, south, south. Coming up, 1 second. All right, so here's where dance love Aussie. Highly recommends that you would visit Australia, spend last New Year in Sydney. Fireworks will have a whole new meaning. Highly recommend you put it on your bucket list. Very, very funny. Thinking of Aussie, I was just speaking with somebody who is leaving for Sydney. All right, the collapse on Aussie daily had started in October. This is what happened on Aussie when the end of the minor trend had been reached. Aussie had gave us dance for more than a week. What has happened when Aussie reached first time reversal zone? You had the opportunity to buy. Is this clear? If you would add the spread on daily chart, on Ninja I use only 1440 minute. It's incredibly clear. Very, very powerful buying opportunity once 4 rules are met. And then you have very, very powerful selling opportunity. And this is a selling trend that each time it comes to the reversal zone, it's giving you bullish correction. This is where it gets interesting, reminding you, if you are a conservative trader, bad idea to acquire trend position at these levels. This is where it's only prudent to stay out. You want to acquire trend position here or here. nowhere near here. This is where it gets very, very dangerous. This is what we call in the course danger zone dance. So currently it's incredibly critical, the response on OSI on Monday. On Monday, is this a correction or is this a bearish trend reversal? Monday will identify if those four rules are met, if you should remain short or not. Based on the current structure, I expect incredibly powerful buying opportunity at 8,900. So once four rules are met, look to buy at this level. All right. As I explained very, very clearly, if you know Alpha Wave Trader rules, you sell here, this would be worth selling opportunity, buying opportunity here. Monitor for four rules to be met at this level on OSI. If four rules are met, you have potential bullish trend reversal. Four rules remains the key. Currently, based on the structure, I see one rule met. All right. Silly, Mike. Silly. Four rules can be taught in the webinar. Four rules taught in the course. Each class, hour and a half, 2 hours. We're asking you for a homework. It's only fair, right? This is a presentation. This is not an education course. Awesome. Thank you, Galina. Galina, дурочка. Unbelievable. Thank you, Mike. Thank you. All right. A little Russian exchange here, which is not unusual. All right, so let's rock and roll. We're gonna go to pound yen. Yes, Janice, absolutely. Not much love from Russian women, just American men and American women, just fine with me. I believe in good energy. Good news, love it, love it, love it, love it. All right, so let's take a look on pound yen. 4 hour, correct? Is it 4 hour? What was the question on pound yen? Please remind me. That's fantastic. I have amazing graduates in Calgary. Amazing. You want to speak with anyone? Send me an email. One of my favorite graduates, Jay, he's an Alpha Wave Traders Club. All right, 4 hour, Bruce, Arun coming up. Pound yen. What is happening on pound yen? You had incredibly powerful shorting point. I will show you multiple formations. What has happened on pound yen? So let's take a look what has happened on pound yen when the first time ever it staged incredibly powerful selling point. All right. Here it is. Know where this level is. Decision point 1. Pound yen 4-hour chart. Reminding you how critical it is to know where this level is. This is the exact same formula, pound yen, as it is S&P 1 hour. Somebody had question on a SPY. This is SPY. ES is S&P 500 future derivative. The formula remains the same. This is where pound yen had collapsed from. You just had another shorting opportunity on pound yen. But currently pound yen is a bit exhausted, giving us only bullish correction. Very, very important next few days on pound yen, potentially giving you very powerful buying opportunity. I don't see it yet. Currently, there is a time to stay away from pound yen. PCLN is next. What is the time frame on PCLN, please? Thank you. Weekly, Sean coming up. Happily married to amazing American man. Thank you for mentioning. Love American men. All right, here is PCLN Weekly. What has happened when PCLN Weekly had reached the first time decision point 1? Since 2013, you had incredibly powerful buying opportunity at 600. 808 was your first level of profits if you're trading weekly chart. How many weeks has PCLN struggled at this level? PCLN struggled at this level for 6-7 weeks. Continuing on with precision, giving bearish correction, not reversal. Again, this is where you're monitoring for 4 rules before you ever take a reversal trade. PCLN Weekly had clearly given only bearish correction. All right? This is where it gets interesting. This is where it gets very, very interesting. It is still only bearish correction. But this is again a reminder. Pay attention to what happened. Reversal zone 1, bearish correction. Reversal zone 2, bearish correction. Reversal zone 3. That's why each of these levels is your target. It is not to be ignored. That's why it becomes very bad idea to acquire long position at these levels. Is that clear? PCLN daily coming up. Let's see what daily will tell us. Perhaps we'll see drastically more clear structure if there's sign of reversals. Oh my God. Yes, daily chart showing currently that 1660 is the most critical level. What is daily chart showing us currently, guys? Let's take a look. This is what currently daily chart on PCLN pointing to. 1146.89. All right. This is, if you know Alpha Wave Trader rules, this is your first target. On daily chart, you're already short from 1200 area. This is where price will show you if the trend will continue further down. This is the first target on short from 1200. All right. What was the next question? Please remind me. Google. What was the question on Google? What time frame, please? What was the time frame on Google? Please remind me. Weekly. Google Weekly coming up. All right. So this is what has happened on Google Weekly. The initial bullish formation on Google Weekly, buying point 650. This is where it started getting interesting, correct? At the reversal zone. That's why based on Alpha Wave Trader method, based on conservative rules, you never, ever, ever acquire long position at this area. And then the powerful trend blasted through after bearish correction is finished. Would I touch Google now? Let's take a look. Let's see where Google is on current formation, shall we? Do you know why I love trading? Because I love working with men and amazing women. That is the most beautiful thing about trading. Those who are truly optimistic and those who exercise no ego, like silly person just had done. Silly woman from Russia, ouch. There's a reason why I left Russia. Love not to see nonsense and bad energy. Remember, you become who you surround yourself with. Each and every time in life you make a negative statement, universe gives you quadruple of that. Each time in life you make a positive statement, universe gives you million times of that. Very, very important to remember that during this holiday season. Back to Google weekly. No, I would not touch Google at this level. I would be monitoring for signs of reversal. But bullish trend is incredibly powerful. Based on daily chart, weekly chart, this is my third target. That's all. Guys, we have 5 more minutes. What was the next question, please? DAX. What was the time frame on DAX, please? And bonds. DAX. Has everybody had seen the link? DAX daily and hourly. Hourly DAX. Hello, Catherine. If you're listening, every time I look on DAX, I think of you. Catherine is acupuncturist and yoga instructor. Highly recommend doing yoga and meditation if you are serious about trading. Magic happens. Buy, buy, buy DAX. Absolutely. I would be monitoring for response of DAX at 950. DAX is showing very powerful signs of reversal. Reminding you, if you know where this level is, you know what not to enter into. DAX is showing very powerful signs of reversal. Rule 2 had been met already. So, if you're trading by alpha wave trader rules, you're already buckling up to take a long entry. Again, 2 rules are in a play. A couple of long entries on the 12s are already played out for about, what, 30 ticks. Yes, life is a gift. Trading is a gift. If you become practitioner of yoga and meditation, it certainly adds to your positive and powerful thinking. All right, DAX daily is heading south, 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 south. Ouch. Powerful, spectacular bearish formations. This is where DAX is heading to. All right. If you know alpha wave trader rules, at this level you would be monitoring DAX incredibly carefully. Very, very critical levels currently on DAX daily at 9,000. If you're trading DAX, you would recognize that 9,000 is very critical number. That reminds you of the importance. Become trader and master of one or master of none. If this level is broken, the end of the minor trend will be 87795. Based on the current structure, DAX will break through this level and will continue all the way down. Again, very, very critical to respect formations here to see if trend is showing the end of the minor trend. One last question as we have 2 minutes left only. Oil for hour. Oil for hour, unless somebody else's question was prior, please post very quickly. 2 more minutes. Bonds, Brett, you come first. Absolutely, bonds. What time frame, Brett, please, quickly? What time frame? We already look on OSC. Daily. Excellent question. Adore Bill Gross, one of the most amazing men ever. Highly recommend you read his biography and you learn what an amazing person he is. All right, bonds daily. Here it is. Taking a major pause at the end of the minor trend. Based on the current structure, bonds will blast through this level, continuing further down. But this is reminding you, if you're trading bonds daily, this is your first target. Very, very critical and very important to recognize where to take profits of the table and what not to enter into. So thank you, traders, so much. Have an awesome and spectacular holiday. I'm still available by email and calls. until Thursday, then I highly encourage you either take a very long vacation or spend time educating yourself, as Christmas time remains the most amazing time to worship, learn, and vacation, not to trade. So thank you so much. Love you to pieces. Love trading. Thank you, Kathy. Thank you, Kevin. Thank you, Mark. Thank you, everybody. Always open. All of my students are open. Don't make life too complicated. Surround yourself with positive people, and you will become positive and happy trader. Thank you so much. Happy holidays. Bye-bye.